Hello everyone, good morning. It's a long day today, so I'm going to do my speech in English, a little bit change in language. My name is Nanda. I'm a corporate partner at HSF, Herbis with Free Hills, based in Shanghai. So I have the Shanghai office as well. So today I'm going to talk about something different, investment in China. But before that, just a little bit about, no worry. Just a little bit about our firm. Herbis Smith is a global international law firm, have offices across the globe. We have 24 offices around different regions, including Asia, Africa, Australia, Middle East, Europe, and US. We have been in China for a long time. We are one of the first international law firms to enter into this market. And our China offering provides full legal services to our international and domestic clients, and many of you are clients and potential clients as well. So, today it's my pleasure to be here to talk about investment in China, opportunities and challenges in this current climate. In the next 15 minutes or so, I'll give you an overview of the current investment climate in China, highlighting the challenges and opportunities for investors into this market, and then also trying to give you some insights as to how to navigate through the complex legal and regulatory framework in China. In 2024 this year, no doubt, China FDI, foreign direct investment figure, drops quite significantly. But there are still some bright spots in the market. For example, the number of foreign invested enterprises newly established in the first 9 months of this year actually increased 11.4 year on year, which is quite interesting. Foreign investment into sectors such as advanced manufacturing, healthcare, and then service sector also shown a considerable increase. This is in line with the Chinese government's priorities. And investment from some countries, including Germany and Singapore, also increased considerably. That said, our observations show that many multinational companies continue to review their China strategy or adopt a wait-and-see approach in terms of new investment in China. But we have seen pockets of investment in some sectors. Many of those sectors are very relevant to the event today. For example, consumer goods, automotive industries, advanced manufacturing, and clean technologies. They are basically adopting an in-China for China approach. Additionally, we have also observed a rise in innovative deal structuring and business models in this country, including joint ventures with local partners, corporate venturing, a lot of CBCs here today, and then also investment in supply chain to build supply chain resilience. We are also seeing more collaboration in terms of technology and IP between international partners and local partners to tap into the technology advancement opportunity in this country. In terms of M&A, China M&A market this year has shown resilience and adaptability despite economic uncertainties. Overall, China M&A market this year is categorized by a very strong focus on technology, renewable energy, and ESG, which is environmental, social, and governance principles. Supported by favorable government policies in China and also improving regulatory framework. We will discuss it a little bit more in a minute. Of course, investing in China comes with its own set of challenges. Geopolitical headwinds, many of the people will know that this is always quoted as the first or the top challenge facing foreign investors in China. Geopolitical tensions, trade wars can create unpredictable investment environment for investors here that affect investor confidence and market stability. So this is a highlight that a lot of the companies are facing here. China's economic slowdown definitely is another contributor. Slower growth rates means revenue expectation dropped, and then that will also affect investment decisions. And then we are seeing a lot of the multinationals are continuous to be very cautious about expanding in China further and making new investment in the current economic climate because of the economy's slowdown. Another factor is intense competitive landscape. China is a very, very competitive market with strong domestic players dominating some sectors. So foreign investors learn how to navigate this competitive local landscape in order to establish a foothold here. Regulatory compliance is another significant challenge for some. For example, there are a lot of new regulations in terms of regulatory and compliance requirements in various sectors, including those related to national security, data transfer, data restrictions or data protections, antitrust, and ESG issues as well. That can be quite complex to navigate, and also some of the rules may vary across different provinces and cities. And then multinationals, because of that, face increased challenge or complexity of doing business in China, particularly for those multinationals that may find themselves trapped in between potentially conflicting legal systems or standards between China and their home countries. That would include, for example, sanctions, export control, tariffs, inbound, outbound, investment restrictions, cross-border data transfer, cybersecurity, IP protection, etc. So all these will require you to really forward understand of this local market with local expertise to navigate through all these challenges. But the good thing is, challenges always come with opportunities. Despite all these challenges, I think China is still a quite attractive market for many because of its size, because its vast market potential. And recent technological advancement in China have played a significant role in creating new investment opportunities. China has made remarkable strides in some areas, including electric vehicle, battery technologies, clean energy technologies, automation, robotics, AI, etc. These advancements not just enhance productivity in this country, but also open up new avenues for M&A, merger and acquisitions, and investments. So the technology sector continues to be, and we forecast it continues to be next year, to be a really hot spot for M&A. We have also seen quite active investments in energy transition-related industries, renewable resourcing, decarbonization technology we're talking about today, ESG initiative, etc. And China is committed to achieving carbon neutrality by 2016. So this ambitious goal itself will spur a lot of investments in the related sectors, including renewable resources such as wind, solar, and hydroelectric power. And we talk about EV, right? So China EV industry and its supply chain have also presented a lot of opportunities for investors, driven by favorable government policies and also technological advancement and a growing market demand. We've seen a lot of Chinese EV manufacturing companies, OEMs, have successfully expanded their global footprint with overseas EV sales increased significantly over the years. So that takes a lot of opportunities for a lot of cooperation between the OEM and its supply chain in China and with international OEM supply chain. Additionally, there is a growing focus on ESG principles. We talk about ESG a lot of this, it's a buzzword, and particularly becoming more important for investors looking to make sustainable and responsible investment. I know that we will talk about sustainable investment in the later sessions as well. From the policy perspective, China has introduced stimulus plan. Our colleague CICC already mentioned about some of the stimulus plan, which is a sort of combination of fiscal and monetary measures trying to boost domestic demand and basically stabilize the economy in China. And we're also seeing they are supporting housing sector and also trying to relieve some pressures from the local government finances. Of course, those effect is yet to be seen, but at least I think the signal is good. They would at least help restore to some extent investor confidence. And from a regulatory perspective, or from a legal perspective, which is my expertise, the Chinese government has also published various policies to support and encourage more foreign investment and to help to create a fairer and better business environment for both domestic and international businesses. For example, the newly issued 2024 negative list for foreign investment has further reduced restrictions on foreign investment, allowing greater participation by foreign investors in many sectors. For example, all the foreign investment restrictions in the manufacturing sector has all been abolished. And more recently, the China's Ministry of Industry and Information Technology, MIIT, also published a pilot program to expand the opening up of value-added telecommunication services in few pilot cities, including Shanghai. This initiative is really encouraging because it allowed foreign investors to operate wholly owned businesses in certain previously restricted sectors, including IDC, International Internet Data Centers, and online data and transaction processing. Moreover, the 2024 Encourage Catalog for Foreign Investment also highlight sectors that are particularly welcoming for foreign investors to join, that include high-tech industries, advanced manufacturing, and green technologies. In addition to these measures, China government has also introduced new policies and regulations to boost the A-share market. We've seen new regulations and measures on the restructuring of A-share companies, which have been implemented to enhance market transparency and also boost M&A activities. And just last week, we've also seen China has published the long-awaited regulations to encourage strategic foreign investment in listed companies in China, which is another welcome move. Invest in China offer opportunities, but at the same time, you have to know how to navigate through a complex legal and regulatory landscape. In the interest of time, I'm highlighting 3 key recent developments that may impact your investments in China. First of all, the Foreign Investment Law and the amended PRC Company Law. The Foreign Investment Law came into effect in January 2020, but the amended Company Law just came into effect in July this year. Both laws have tried to streamline regulatory framework for setting up and running companies in China, and then also enhance corporate governance, including directors and officers' duties. This will also require existing foreign invested companies to convert its corporate form and then adjust their corporate governance structures and also amend the Article of Association in line with the new laws by the end of the year. We've seen a lot of clients now doing the exercise of reviewing their structures to make sure that, for example, the allocation of powers between shareholders meeting and board of directors, the capital contribution scheduled, related party transaction compliance, etc., will be in line with the new law by the end of the year. We've also seen sometimes when you're amending your articles of adjusting your corporate governance structure, that will open gates to renegotiating certain commercial terms with your partners under the existing joint venture contract or article association. But anyway, overall, these 2 laws create a more accountable and transparent corporate governance environment for companies, which is expected to benefit both international and domestic businesses in the long run. The other thing is the relaxation of the merger control filing regime. This change aims to strengthen the merger and streamline the merger control filing process in China, making it more efficient and less burdensome for companies doing M&A in China. The new regulations have increased the filing threshold, meaning that more company or more transactions can proceed with their transaction without going through the lengthy antitrust reviews in China. The relaxation also includes delegation of review authorities to local antitrust authorities, which enhance and increase administrative manpower and efficiency. The changes also include measures to enhance transparency in the whole process, making more clear guidelines, and then also more accessible information to our investors and businesses doing M&A here. So this is all positive steps, which hopefully will reduce costs and time associated with doing M&As here. The other thing I would like to talk about is, again, regulatory compliance. On the one hand, China is continuing to issue policies to encourage investment on the other hand, we are also seeing it tightening its compliance regime. Particularly from a lot of companies here, they will be very concerned about data protection, cross-border data transfer, etc. In September, just a few months ago, the State Council of China released some new regulations called the Network Data Security Management Regulations, which come to effect 1st of January next year. One of the highlights is the clarification of some compliance requirement for companies that transfer, process, and collect important data. Important data is always a confusing area under the previous laws, so the new regulations is a positive move to try to provide certain clarification. And also more recently, China also tried to ease the cross-border transfer of personal data, which is another welcome move, aiming to balance data security with economic growth. So, our recommendations. How to mitigate all these challenges, compliance challenges, or legal regulatory challenges. So a few suggestions for myself. Engagement with government and local partners are really, really important. Building relationship with your local government and then all local partners can help to mitigate a lot of those risks and understand the operating environment in China. Particularly engaging with your local partners. I know there are a lot of local partners today. With their insights, with their understanding of this market, definitely will provide a lot of valuable insights and support to you. Reviewing your China strategy. In light of all these challenges, actually a lot of multinational companies are already doing that. They are trying to reprioritize and optimize their business operations here in China. These would include reorganization, restructuring, sometimes divestitures of their non-core businesses. And then, of course, also new investments and opportunities and acquisition opportunities in new growth sector and technology, so that they can be more resilient and competitive in this market. Innovative deal structuring, we touched on this a few minutes back, but yes, we are definitely seeing a lot more innovative deal structuring, and that would help navigate some risks and make sure that you can deal with those challenges. This may include joint ventures we talk about, strategic alliances, and other collaborative arrangements like IP technology. We're also seeing corporate venturing and data as assets, a popular strategy, particularly by using data as assets. Companies can leverage their data resources to create more value and drive growth. When you're doing M&A, definitely you have to conduct a thorough due diligence, there's no doubt, including legal, tax, finance, and operational, etc. But in the last 12 months or so, we are also seeing ESG related due diligence is getting more common in this market. Implement robust compliance programs is very important. It definitely helps you to mitigate risk. This will include having clearer internal guidelines, policies and procedures, conducting regular audits, and providing compliance trainings to your staff and employees. So overall, China will continue, I think, to publish policies to stabilize the economy and encourage investment. But at the same time, compliance with local regulations, particularly those related to national security, data protection, ESG, would be important, critical for investors going forward. To conclude, I think China offers a lot of opportunities to investors, but it also poses unique challenges. A strategic and pragmatic approach informed by a deep understanding of this market and the regulatory environment will be very essential. I think by doing all these, hopefully some of the tips are useful. You'll be able to capitalize on the opportunities that China offers. Thank you very much. If you want to know more about legal and regulatory updates, please follow us on our WeChat platform. We regularly upload some legal and regular updates, not just in China but globally, to our platform. And then thank you very much, and I hope you will enjoy the rest of the day. 好，感谢，谢谢。